Hello, everyone. This is Marjorie E. Roberts, and I am the owner of Roberts, Mangum and Bennett Consulting, which is an accounting firm here in the Metro Jackson area. And thank you so very much for joining us tonight on the Money Variable Podcast. And tonight we are continuing our series on wealth building with life insurance. It's part two. We're going to be taking a deeper dive into building wealth with insurance products. And I have one of the most amazing insurance brokers in the country, Miss Michelle P. Johnson here, the owner of Eternity Insurance Agency. And I'm going to let her tell you a little bit about her. Michelle, welcome and tell the people a little bit about yourself.
Well, great evening, Miss Marjorie. I thank you, first of all, for having me. You have been very persistent about making sure that I get on, and I thank you for that because I was trying to run. But I thank you for allowing me to enter into your space. I am Michelle Pendleton Johnson, as she stated. I am the founder and CEO of Eternity Insurance, founded in 2006. I've been in the financial and insurance industry since 1994. It's when I first entered, um, holding many positions that we won't go into, but I've been blessed to hold many positions within that tender, and I've grateful for all of those positions because they have placed me in the position that I am now, the CEO of Eternity Insurance Agency. I have been blessed to be able to help and assist several people, businesses, you name it, we've done it over the course of this longer than 20 years now. So it's been a pleasure. And again, I thank you for having me.
Thank you so much and welcome. And before we get started, you guys, just a disclosure. I am an accountant, but I am not your accountant. So the information that we are providing today is for information purposes only. She is an insurance broker, but she is not your insurance broker. If you want to do business with her, you will need to reach out to her directly, and she will provide that information to you a little bit later on in the podcast. So, let me get into these wonderful questions. All right. So, tell me what drew you into insurance, and why do you think it's such a powerful tool to help people build wealth?
I was drawn into insurance initially because of family. My mother became ill. And with that being said, the insurance, I learned a lot of things that was not worth learning at the time. Let's say it that way. I would have much rather known the information prior to than being inside of the situation when there's nothing that you can do to prevent or avoid where we were.
Right.
And what I mean by that is that my mother was worked a GM product. She was there before I was born, worked there all her life, and invested in a life insurance policy. She had a $500,000 policy, but was not told, due to the lack of knowledge as well, was not told that that policy was not going to be portable, number one. And portable just means that it does not go with you when you leave the company. And although she did fight for it, she was able to get hers to be portable because she left on disability. The problem was is that it started to decrease annually. And with that being said, she had been out for several years. So before the time of her death, the policy was null and void. So just imagine having 500, $500,000 policy, and then only to find that you don't have anything. At that time, trying to reinsure her at a higher age limit with health issues, the insurability portion came into play. And with that being said, it became very difficult. So I just vowed that we perished, like the word says, for the lack of knowledge. I knew that there was had to be someone that could give information, and it was very hard to find. So I deemed to become that one. That's why I focus on helping those individuals and businesses that are deemed to be high risk, that are deemed to be insurable, that are also deemed to just not have the know how or the connectability to be able to operate their business as a large scale corporation. I tell anyone, you're not a small business. Don't let anyone else tell you that. So we don't say, I'm a small business. No, you are a business,
Yeah.
and that's that. So that's the reason I got into the insurance industry. Over the years, the investment portion became inevitable because of after I was sitting at different tables, learning about how the wealthy um, maneuvers their money, avoid the tax issues that those that are working hard and not in those tax brackets deal with. So, with that information, I started to look into how I could offer that same opportunity to the people that I know. It's not a matter of we're not able to do. It's not a matter of it's out of our reach. It's just a matter of you have to know what your goal is, where you're trying to reach over into, and then you set the plan. A man without a plan is a man that plans to fail.
Yeah.
So once we set that up, we just maneuver over into utilizing it as a tool. Everything is a tool. Get the right tools in your arsenal, and you're unstoppable.
That is good. That is good. Okay, so you mentioned portable. What is something or what should people look out for when they are working and they have these policies in their on their jobs in their workplaces? What should they look for to know that they can carry it over with them, or what would happen, concerning if they were became disabled on the job, would they still be able to have that coverage? So, what are some things that they need to look out for?
One of the main things is they need to ask questions. When the representative, normally when at corporations, they do it in what we call a meeting, and it's everyone comes in and it's open enrollment. So at that time, everyone just comes into normally probably the cafeteria, the break room of that organization, and they sign up. At that time, most of the time, no one is asking questions. They're just signing up for what they see on the paper for the amount of that fits their budget or that they want to pay.
Mm-hmm.
We have to get out of thinking that the cheapest is the best and that we just want just to get in.
Yeah.
That does work, but you don't have to spend a lot in order to get what you need in some cases. But the main question would be when I leave this job, if I'm not planning to retire or die here, will I still hold this plan? Will this plan actually stay at the face value that I'm purchasing? Because even though it may be portable, that does not necessarily mean that your face value that you purchased when you purchased it, say at 25, when you started that position, and if you leave at 50, that doesn't necessarily mean that it will stay at that amount because it could decrease over the time. You have a lot of policies that when you leave the organization, they decrease annually, or some decrease after in an increment of 5 years. But nevertheless, they decrease. So again, you want to ask questions. That's the main thing. Question if it's going to be portable. If it is portable, will my rate increase? Because if it's portable, sometimes the rate increases. So ask those questions in the beginning, and that will keep you from being blindsided when you need it.
Oh, I love these gems. I love them. Okay. Okay. So, tell us about some of the products that are available to actually help um, people build wealth through insurance, life insurance.
There are several products that you can utilize in the insurance industry to help build wealth. The main one that most are utilizing is life insurance. With that being said, you have to Utilize the right tool again. That's for your investment portfolio. Insurance is just that. It is utilized to cover the risk. Life insurance, we're the risk. So, with that being said, if I'm covering myself, then I want to make sure that I cover me for what I am looking to leave for a legacy after, and I did say after my final expenses are paid. The one thing that we miss is that we tend to want to do one or the other, or not, and not both. First thing we need to do is make sure that we're covered for final expenses, so that we don't have to set up the GoFundMe, so that we don't have to pass the hat, or so that we don't put that burden on another family member. At that point, once you have that covered and you are able to invest, then you utilize the proper tools. There are several. You can utilize whole life insurance. You have to make sure you get the proper whole life insurance, because just a whole life policy and showing that you have a whole life policy, with some will sell, does not necessarily mean that you're going to be able to use that policy to invest. You have a lot of policies that will tell you, policies that'll show you, well, hey, it's going to build cash value. That is true. Whole life will build cash value over the years. But if you're trying to utilize it as a wealth building tool, you need a dividend paying life policy. You need one that is compounding interest, not simple interest. And so those are the different things. Most life policies, whole life policies, are at simple interest. They're not compounding. So you're not going to be able to gain cash value to utilize that to borrow against, to use for wealth building if you choose, to use for debt cancellation, to use for tax brackets, to help with tax breaks, to keep you out of paying taxes, because you can apply funds, but again, you have to speak with an advisor to tell you how to help that work. But you can apply funds into your life insurance policy, and those funds will keep you from paying taxes on those funds. There's a lot of business individuals that pay funds if they have funds and they see that they're going to have a substantial amount of income, or if they sell a property or something of that nature, they don't want to pay taxes on that money. So they will turn around and invest that over into insurance products, life insurance products most of the time.
Okay.
And there are different ones.
So since you mentioned that investing in a life insurance policy, so explain that to the people. So you're putting your own money in there, because I just want to make sure we break it down for the folks.
Yes. So if you decide that your portfolio is at a place where you can have funds to invest, or if you have an overflow of funds that you want to utilize, you can take funds, apply them to a whole life insurance policy. There are different ones. It is not just a one size fit all, but you can apply it into a life insurance policy. That life insurance policy can then in turn just, let's go back. I'm sorry. Let's make it simple. Let's just say I have $1,000 overflow that I want to invest. I could take that $1,000, place it into a whole life insurance policy. And in my case, I'm one that I believe in guaranteed. I'm not a gambler. I don't do the risk thing as much, so I like to make sure that I know what my return on my investment is going to be. I want you to let me know immediately. So there are policies that you can do that will give you a guaranteed return. And that guaranteed return is printed out in the illustration. It shows you what that return would be year one through whatever year you decide to stop paying into it. Once you stop paying into it, you will just see your life benefit of your face value increase, but your cash value increase will still only be increasing due to the interest paid, because you have stopped paying into it. Now, let me say this, while you are paying into the policy for the cash portion, you also have to pay the life portion of the benefit as well, which means, say, for instance, if I have a $500,000 policy, whatever that premium is for my age structure, for my health issues, then that premium has to be paid as well. You combine the two together. So let's just say I'll utilize one of my clients. They invest $100 monthly, and that pays the benefit for the policy. And then they take the other remaining portion and pour that over into the cash value. You do not have to continue to apply money in the cash value because you can make a dump, if you what some people call it, which means you just take a lump sum and dump it over into the cash value, and then you allow it to grow interest. So there are different ways that you can make the cash value grow for you. There are many options that you can use. They have infinite banking, which is the biggest concept, which was developed by Mr. Nelson Nash himself. There's Become Your Own Bank. That's also another acronym that they utilize. With all those being said, when you utilize those avenues, you have to make sure what your end goal is. You need to know upfront what you're going to be able to invest, what you're looking for. Of course, you can't expect to invest $100 and think you're going to get a million. That's just
Right.
not how it's going to work. You're going
Right.
to have to know that, okay, if I want to be able to turn around and buy $1 million house out of this by borrowing against my cash value, then I can't put $100 in this policy and think
Right.
it's going to allow me to get $1 million out in,
Right. Right.
but not instantly. Let me say that. Now
Right.
that's another thing. These are, if you do anything with the whole life, a dividend paid whole life policy, you are able to borrow against those policies. That cash value amount, you're able to borrow against it before that first year is over. So that's something else to think about. And it is true because I have done it. So you are able to utilize it. I have people to tell me, oh, there's no way you can borrow against cash value that quickly. The devil is a lie. I know you can because I have done it. So you have to make sure that you structure your policy that benefits each person. And also, you can have multiple policies. Sometimes we think that we can only have one tool. No, you can have multiple policies on the same person.
That has been like a myth in our community that you're only supposed to have one life insurance policy. I don't know why
Exactly.
that is, but
And I,
that's the myth. But not just that, you know, the myth of people thinking that there's only term life and whole life insurance
exactly, exactly.
or
Um,
a burial policy. And there's
Now, I just heard that today about a burial policy, and a burial policy is utilized. The term was made by, for basically the mortuaries
right, right.
company. But to be perfectly honest, burial insurance, the only difference between that and regular life insurance, term life insurance, whole life insurance is that if you purchase a burial policy, it's just for that. They won't allow you to utilize it for anything else. So I
Mhm.
don't recommend purchasing a burial policy. I
Right.
can never forget my grandmother had a burial policy when I was a little girl. The man used to come and we used to run and say, "Here come the insurance man." And she paid that burial policy until she left and went to glory. And I can never forget the fact that that policy did not pay to lay her to rest.
Oh yeah.
So, that just gives you some idea of where you are. Now, I'm not saying that all of them will do that, but I will
Right.
say that was the case in my family.
Yeah.
I recommend that you purchase term life insurance policy so that you can utilize the portion that's needed to lay your family member to rest and utilize the extra, if you get extra, to do whatever is needed because there are going to be final expenses that are going to be needed
That's right.
anytime someone passes. You're going to have to settle their estate if they have one. If they don't, you still are going to have expenses because you have to finalize everything that person owned or had or was involved in.
Hmm.
And If you have the funds to do that, that makes a bigger difference.
That's right. That is good. Ooh, I'm loving this. Okay, so let's talk about businesses. Let's do a little shift. I know a lot of business owners don't really think that they can afford insurance for their employees to have. Because, at some of the larger businesses or larger corporations, they got, like you mentioned before, people coming in the break rooms and, signing, getting folks to sign up for insurance and things of that nature. So, what are some practical things for business owners? Give the business owners some things that they can actually do. What products will help them?
The first thing that a business owner can do is realize that not everything has to be paid for by the business owner. You can offer products to your employees and have them to be what we call voluntary enrollment, which means you are allowing them to enroll in a product because they're going to get a much better rate enrolling as an employee of your business versus them doing that same policy individually. Prime example, you can get life insurance, you can get cancer, short term, all of the ancillary products that are offered to you when you work a job. They tell you, hey, you can get cancer, you can get a short term disability, you can get, your dental, your vision. All of those products are able to be obtained. And I tell my business owners, tell me how much you want to spend for each employee, and we'll work backwards from there. So if they tell me I want to give each employee $100, most of the time I'm going to apply that $100, to be perfectly honest, towards their health insurance.
Right.
And because the vision, the dental, they're all are little. They're normally you can get them for $4 or $5 an employee. So you let the employee take care of that. But I try to apply the largest amount to health insurance for businesses. Far as life is concerned, life insurance, you can offer them a policy. You can say you're going to pay a portion, they pay a portion. There are different ways to structure a plan, and that gives your employees the opportunity to not only be covered, but healthy employees and employees that are covered are employees that are normally there to stay.
Yeah. Oh yeah. Woo, this is good. This is really good. I am very thankful for the information that you are providing because it is necessary.
Thank you.
It
We
is
have to be in a
it's
space.
necessary.
Yes, we have to be in a space to where we get out of the mindset that I don't have to have it. When I first entered this industry, I had someone to tell me one time that when I'm gone, that's their problem, meaning the family members that are left behind. And that is the most insane thing that I can think of
And
because,
selfish. And
yes,
selfish.
exactly. Why would they're already going to be mourning your loss?
Mm-hmm.
Why would you allow them to mourn your loss, your bills, as well as the headache to try to either disperse what you left or hold on to what you left? And that's the reason why so many children don't get to keep what their parents worked for because they are not taught how to properly take care of them, how to pay the taxes for insurance, for properties and things of that nature. So they're not taught how to keep the legacy going. If you utilize the tools properly, you can make a legacy to make generational wealth. Turn around, teach them how to take those policies when they pay, turn them back around into the family legacy. You can do it via trust. There are options that you can utilize to continue the legacy of the person that has left. I often tell people, and I've heard, matter of fact, I heard it from Steve Harvey. He said that, why you don't know your grandfather or your great grandfather? Because they didn't leave you nothing. So we don't remember the people and don't know the people that never started anything for us.
Yeah.
And if we're going to change the narrative and push it forward, we don't have to go back and reinvent the wheel because it's already there. We just need to make it go faster. So we need to educate and continue to show, hey, we can utilize these tools to grow the family wealth, and it can go for generations and generations to come.
Yeah. Oh, that is good. That is good. I knew this was gonna be a good conversation, but I mean, you are mentioning so many things that are eye-opening for me, especially, with me dealing with business owners, and how they can offer insurance to their employees. I mean, I had no idea how that worked.
Yes.
No idea how that worked. Okay, so how are you able to help people who are considered high risk coverage?
Well, in insurance, if you're considered a high risk, then we have to put you into what we call a guaranteed issue policy. In most cases, um, now the guaranteed issue policies are policies that are able to be underwritten without any medical questions. I offer those to what is considered high risk or uninsurable because of maybe health issues. Most of the time, that is the reason that a person will be what is considered uninsurable, or their insurability rate is higher. Because you can get some policies that people will think that they don't qualify for, and they just get rated, which means that you have that policy still, but you're rated in that policy. So it may not be the regular standard rate, but you're still able to gain a policy and just be rated for it. And then in that case, you're able to get more in a face value. The guarantee issue policies are normally a lower face value. So they're normally 25,000. Well, you can get them at any number, but normally about 25,000 to 50,000 in your maximum. The biggest thing on a guarantee issue is you need to make sure that they have, if they have the contestability clause. Most do, which means that within 2 years, you know, you have to wind up holding, if you're going to hold that policy, if it's contested, far as the death is concerned and things of that nature. Some don't do suicide. If you have a policy and that person passes by suicide, it does not pay. So you just need to, know what policies do what. I offer guarantee issue policies that don't have the 2 year look. They are instantly guaranteed for you to start utilizing when you sign the policy and pay. We also offer the ones that have the 2 year minimum look that you have to, which means that you have to live at least 2 years from the date that you purchased the policy
Mhm.
for it to pay the face amount. If not, it pays you back the premium that you paid in the policy.
Okay, okay. Oh, I'm loving this. I'm loving it. Okay, so what is the age that they will not insure for life insurance?
That depends on the company. You're going to have some companies, they stop at age 65 insurance. You have some companies that stop at age 75. You also have some companies that stop at age 85. That is individual company based on their policies. Some policies you can get at a later age, but of course the premium is going to be a little more
Mhm.
fluctuated.
Right.
So you have to be prepared for that. I have some clients that, I tell them, look, if you can afford to do this monthly, you may not be able to afford a $300 premium monthly. So take
Right.
150 of it and, place it into a savings
Right.
and leave it there.
Right.
During it just for your burial, because it's not for you to use for household expenses and
Right.
the burial, because you're
Right.
not going to have it at that point.
That's right.
But you have to make sure that you understand what you're going to utilize the policy for. And with that being said, sometimes our older generation think, well, I'm too old, or the kids of the older generation may say, well, I'm not able to get mom or dad a policy. They're 75. There are some policies that will allow you to do 75, but you have to catch them at the 75. They won't go into year 76. We have a policy that you can do that with. The only problem, and I won't call it a problem, but I will say you have to be ready to pay for it. Yeah. So, but most premiums on a 75 and up, you need to look for that premium to be about $200 a month or up, because that's just where they're gonna run.
Yeah. Oh, that's good. That's good. Okay, so give our guest some practical takeaways that they can use.
The first takeaway that I would give is make sure that you are covered. Get covered. If it's a term policy, if it's a whole life policy, if it's an IUL, which is another tool in the the whole life sector, but whatever it is, the first thing is to be covered. One of the biggest things that is a misconception is that we do not need coverage on our children. Most people think that they're going to outlive their children, so they don't need coverage on their children. But if you look around and watch the news, a majority of our children are leaving this world before mom and dad.
That's right.
I'm a product of that. My brother, was deceased. My mother and my father buried my brother. So, and you have to pay attention to that. We think that we do not need insurance on our children. When a child is born into a family, an insurance policy needs to be taken out on that child. A whole life insurance policy needs to be taken out on that child, not a term. And the reason I say that is because that child is insurable. They have no issues most of the time.
Yeah.
You can gain a $500,000, $1 million policy and make a generational legacy off of that one policy for that child. That policy can turn around if you get a whole life policy, the right one. You can make that policy pay for that child's education, for that child's car, for that child's home in that case. So every family needs to be purchasing insurance on children that are born into their family. Children that are not covered in their family at this time, they need to be getting covered. The older they are, they may look at term. Just understand that a term policy is just what it says. It terms out. And most term policies do not pay out because the person outlives the term. So it is cost effective. So if you're not able to pay for a whole life policy, definitely get a term policy, because it is better to have something than to have nothing. And it's better to have it and not need it than to need it and not have it.
Oh yeah. I love it. I love this. Okay, so Michelle, tell everyone how they can contact you.
I can be reached. Our office is 601-371-9911. I am able to be reached via email at eternityinsurance@att.net. We are on Facebook and social media as well. Our website is, and all of these are the same handle, which is eternityinsurance.net. We are in the process of upgrading all three of those. So if you go out there and see something a little crazy, it's okay. But it is currently being worked out. I've been blessed to finally be blessed with a new IT person. And so they are working out all the kinks and getting us back to where we can start back posting to social media on the actual business sites. So again, that is eternityinsurance.net for all of those handles. And we are on Facebook, Instagram, and that is also the website link.
Awesome. Thank you so very much. And thank you everyone for joining us. If you have any questions about anything Michelle has mentioned, please be sure to reach out to her. She is a well of knowledge, and I am so thankful that she decided to come and be a guest on the Money Variable podcast. Again, this is Marjorie E. Roberts, the owner of Roberts Mangum and Bennett Consulting and the founder of The Money Variable. So I want you guys to have a great one. We will see you next week because we're going to continue with part 3 of how to build wealth with life insurance. Thank you guys so much.
Awesome.
Peace and blessings. Bye-bye.
Bye-bye.